All right, so in this video, I'm going to be talking about the most misused concepts in SMC. Now, it's none other than order block. Order block is the most misused concept in SMC. Majority of traders just like marking random candle and calling it order block, and then they wonder why price slides through that order block or why the order block get disrespected. And then majority of them say SMC concept is not working. So in this video, I'm going to teach you how to mark a valid order block. All right, look at my chart. I have a USD JPY chart. For an order block to be valid, first thing for me is that it must align with higher time frame. If your higher time frame is bullish, it's of no use or of no sense utilizing a bearish order block. Now let me show you an example. Now look at this. This last bullish candle before this move is actually a bearish order block. And most people will be calling this order block a valid order block. Why? Because it's actually what's broke structure. But for me, this is a fake order block because it doesn't align with the higher time frame. Because the higher time frame is actually bullish. But before I show you that, now even as this order block does not align with higher time frame, you can see when price tap into this order block, price still reacted by what? Still continuing what? Selling, which many people will ignorantly add more positions. But as you can see what happened, price was traded through the order block. Because if you're actually selling and seeing this break of structure, this is the right place to put your stop loss. But here is the truth. This order block is not valid. Price came here and still was reacted of this order block. And then you can see price traded through it. And then they wonder that why the price traded through it. Why is the order block not respected? Because they are not reading the context properly. Now, let's go to the daily time frame and see what is happening. Now, look at the daily time frame. Price is what? Bullish. The higher time frame is bullish. Even though if you go to your weekly now, you will see, look at the weekly for instance now. The structure is bullish. Can you see? Let me go to the daily. Look at the daily time frame. So the structure is bullish. So how do you expect a bearish order block to be what? To be respected in a bullish structure? It can't happen. Now, this is actually what happened. That order block that you saw, look at what happened. There was just a change in delivery, and this was just a liquidity sweep. It was just liquidity. So after liquidity was taken, we have a what? We have a break of structure. This bearish order block is not real because the higher time frame is what? Is bullish. Look at this, actually the 1 hour time frame. Look at, let me go to the 4 hour time frame. This is a valid order block. Look at this. Well, now we've known that our higher time frame, our daily, our weekly is bullish. Look at this. This is actually a valid order block. Now, this order block took liquidity, as you can see. Look at this week, it took liquidity and price broke structure. Look at this, is a break of structure. Price what? Broke structure. So making this order block valid. Now, this order block is valid because liquidity was taken. There was a break of structure and it also aligns with an higher time frame. Now look at this. Look at this. Price bought and also created another order block. Price created another order block, and that order block was perfectly respected. Look at this. This is also an order block. Look at price created this order block, which is this last bearish candle, and as you can see, price respected this order block perfectly, and then there was a break of structure. You can see. So this order block is valid. Now, don't forget, for an order block to be valid, number one, it must align with higher time frame. The higher time frame is bullish, so we have a bullish order block. Very perfect. Now, it broke structure and also liquidity was what? Taken. Is that clear? So that's how to mark a valid order block.